From our perspective, it is a good quarter because we saw another quarter of underlying strong volume growth, which is always a good sign that we are getting traction, we are able to do work with clients. So we had a 6.5% growth on volume terms, and on offshore basis it was even a percentage terms higher. So overall I would say a good quarter. Where the market reaction is somewhat critical is in two areas. One is to say that could we have done better, and I mean I can't disagree with that. Of course we could have done better. But if you look at the mix of our businesses, the mix of our verticals, we tend to have a balanced portfolio across multiple sectors and multiple verticals. And if you have a balanced portfolio, not all sectors will do well at the same time. So there are some sectors which have lagged the overall industry trend, and particularly while others have done well. So we have done quite well in healthcare, we've done quite well in retail, we've done quite well in energy and utilities. But at the same time, there are sectors like technology, which is high tech, and some parts of telecom which have tended to lag. So because we have a broad portfolio, we tend to not get a full impact of a kind of upsurge which is restricted to some sectors. Telecom actually for us comes in two flavors: telecom service providers and telecom equipment vendors. And traditionally, telecom equipment vendor business has been more challenged because of the consolidation, fewer vendors, and so on. But surprisingly, there we have kind of picked up and we have done reasonably well. On the service provider side, while traditionally it has been a high growth sector, on a quarterly aberration basis, I would say that we have had a little bit of a slowdown there. I think two developments over the last quarter. One is that there is still some uncertainty about the currency. And as you know, I'm sure all readers are aware that there is a big meeting taking place in Seoul with the G20 ministers, hoping to avert a currency war. And I think good sense will prevail, and in the end, some kind of multilateral arrangement will be worked out, which meets the needs of all countries and economies. So I'm kind of optimistic that some kind of compromise will be reached, which will avert anything which is termed like a currency war. But clearly, till that compromise is reached, there is bound to be concern because so much of our business is denominated in foreign currency. The other concern which has been there is about the high levels of turnover or attrition, as we call it. And I think there it has been a concerning area, but thanks to, I think to some extent, growing maturity of people, as well as because of some of the actions that we have taken, we've seen a steady decline in attrition numbers this month, even last month of the last quarter, and I think that will gradually subside to make it more of a manageable level. We started with I would say, a first goal to say that we will achieve at least a quarter of our revenue in non-linear methods. And I think in this relatively short space of 2 years, we have come up to 11%. But I'm fully aware that the first 10 or 15% is easier, and as you kind of go beyond that, the climb becomes harder. Well, in fact, this quarter consulting grew sequentially 14%, and not only in terms of revenue, but we added 18 new client partners to the 38 that we already have. So now we have a solid team of senior people who can interface with clients. And the mandate that they have is not only to sell consulting for the sake of consulting, but to basically elevate and create confidence in the minds of clients that Wipro can do more complex, more business critical work. And hopefully that leads to not only solving clients' problems, but creating downstream revenue streams for either IT or process work that Wipro can do.